What up, boys? We back once again. Okay, so I've been playing Madden with my buddy, but I should probably just do this video real quick. It's late, I know, but the flow settings that I talked about in the last video have been working out, finding really good plays. The plays aren't always super lottos or anything, but the thing about the plays that I like is that they really are putting you in a position to profit. The win rate that I've had taking these plays has been really good. I would say 70–80% of the plays that I've done using this filter here, and kind of just, it's really by discretion finding the good plays that I like, but just kind of taking the plays and having a chance to profit. So a lot of times I've had profit and it's been a loss only because of the pattern day trade protections, and so I do have to be a little bit more selective on the plays, just because I need to be able to, I want to try and swing them if I can. But anyways, the settings are like this. Volume, I'm gonna leave this here. We're gonna do this so you can see them, but volume is greater than OI, which is the open interest. And what that's telling you is that the volume at that particular strike is greater than the open interest, and so it's already going to be kind of a, I don't know what to call it. It's going to be a liquid strike for one, maybe a competitive strike. The market is kind of playing around this particular price point and expiry, so you really want to have that selected. Another thing too is the out of the money only, which will eliminate a lot of the leaps that show up in the filter, which is super annoying. If you're not a leap type of person, you really want stuff that's going to be, out of the money, because you're not, unless you're just long-term investing. But I think the idea behind this flow is to catch the out of the monies and get those exponential returns. So that's the idea here. And then having single leg only selected, because the filter does, or the flow does show a lot of multi-leg type of plays, so being able to filter that out and only see the single legs, huge. So they've definitely made some really good updates with unusual whales here with these filters here. And okay, so then the next is to have your size 100 plus, and the reason is we want to filter out a lot of the smaller plays that come through. 100 just seems to filter that out pretty well as far as the size goes, and gives you a decent volume, a decent rate of plays coming through to analyze. Now you do have to have some discretion here. I'm going to kind of show you what I look for, and it's been working well so far. It doesn't mean it's always going to work well, so definitely don't just like YOLO on the first play you see. But I've been basically doing one, maybe two contracts. If I do one, if it starts working, and if it's working well, then I'll throw another one in there. But I try to stick with whatever the whale is doing. So we're just trying to find whales, trying to see, what they're doing. And let me tell you, this worked beautifully with NVIDIA today. If you missed NVIDIA, the biggest tell that I saw this morning is NVIDIA is at about 283, 284 this morning, and I saw a huge monster come in and buy the 290s. So basically a Moby Dick came in and bought 290s, so I instantly went and bought 290s. Now I lost 50% on that 290 as soon as I bought it, but I kept seeing the flow coming through, so I just said, okay, I'm just going to hold on to this. And eventually NVIDIA was able to just bust up as the flow kept coming through. So that's one thing too, is you want to see a few. You don't necessarily need this, but you want to see some more whales than just the one, I would say. Like the more, obviously the more the merrier here. So, but if I basically held on because I kept seeing that flow come through, so I held on, and that 290 eventually went to about 22, 24. So that was a really good play, and the reason I sold it was because as soon as it got to that 312 area, which I already knew was pretty overextended, I saw a lot of bear flow coming through, big buying on the puts. So I saw this type of situation where, like, you see a play like this where it's a buy, it's a pretty close strike. Sorry, I keep doing this. It's a pretty close strike, and it's a pretty hefty size. It's a pretty hefty premium. And then you got the volume that's exceeding the open interest. So very nice little play here. I also was in the AMDs because of the flow as well, and the 135s, which I also thought was a really good play, and that ended up working pretty good. So 30,000 premium plus seems to be pretty good filter. A lot of times you're going to see bigger premiums than that, and the bigger the premium, the bigger the size, the better. So you could even increase this if you only wanted to see like. But I like to have quite a few plays coming through just so I can kind of analyze them. Like you can catch something like the Lucid. You know, I actually was excluding ETFs and indexes, but I think that's not as wise now because having the ETFs and indexes in here, so I'm actually going to remove that. Having those in here help you trade the ETFs or know the market direction. So if you see a ton of buying on IWM, then you know that the rotation is going there. Or if you see a ton of buying on Qs, obviously today was kind of a tech day, but definitely having the ETFs in there to monitor that, or to, you know, if you catch a huge whale on something, you can go with that as well. So definitely an interesting new filter. Now, as far as the market conditions right now, if you guys follow this sort of segment, we're still super mega bullish in the markets. The patterns right now, the market risk environment is super low. There's really almost no risk. I mean, just a tiny bit of risk to actually own equities. So I'm a monster long here. The patterns for the market moves went from bearish, slightly bearish, but basically it's been bullish since October 13th FOMC. And then it just went mega bullish from this FOMC. So still expecting much higher prices until we see a blow off top. We started seeing evidence of that today, and I'm going to show you what I mean. If I can pull up my chart here, the VIX tried to spike here a little bit. You're going to start seeing more of this if we start getting closer to the top. So if you guys are playing the markets intraday, keep an eye on the VIX. If it's moving up while SPY is moving up, you can see what happened when the VIX spiked. It caused SPY to come down. But the problem with VIX is it's under it's just under so much pressure, supply pressure, that every time it spikes, they're selling it off. So, you know, keeping an eye on it. If it starts rising while SPY is rising, that's your heads up that we're getting close. My experience in the past is it's been a few days of that. You'll see the VIX rising, gapping up, rising while SPY is going up. That's the key that you're near a local top or some sort of corrective pattern is going to start forming. So keep an eye on that. So it's again, and SPY flow. I'm honestly not even going to look at this anymore because it's kind of pointless, because all people are doing is just hedging, and you can basically you know, watching the live flow, you get an idea of the positioning already, so of the whale positioning. So I'm not gonna bore you with the SPY flow, but definitely look at that if you're interested in that. As far as the MOBADEX goes, which is tracking unusual options activity, we see quite a bit of a spike here as far as this trend goes. It went to 3,000. That was from a minus 399, and so that's a nice bullish move in my opinion. It's not too bullish. It's not over bullish. It's a nice move off of a low here, so that's a really good sign. So boom, 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 all bullish. Risk environment, our timing, and then our options are all bullish in my opinion. Supply chain, I saw Biden talking about that a little bit today. Inflation is not a thing until December 2022, 2023. Infrastructure, I saw they kind of caused a little bit of a disruption talking about infrastructure, I think. So I'm not too keen on what's going on there, but not really worried about it just because I know it's super bullish right now. Small caps took a breather today, but I still think there's a lot more upside for small caps. Crypto, I do think there is a large sell. I was bullish yesterday, but after watching it today, I don't know if it was just taking a breather because of small caps as well. But definitely don't. I'm not huge on crypto right this moment until Bitcoin can break up again. But COVID potentially coming back. I'm not sure, but we'll see. Still keeping this in my mind, that Apple and Amazon, their earnings, they didn't crater, or they cratered, but they didn't continue to crater, and Amazon is coming back. So definitely very bullish that pattern on earnings was invalidated. A lot of times the cratering on earnings will actually kind of confirm a top, which is why I was getting super bearish, but that was invalidated in my opinion. FOMC, they token tapered. If you watch my other video, I talk about how they basically, all they did was lower the minimum of the repurchases. They didn't actually say they were going to buy less. And actually they have no cap, so all they did was lower their minimum. So everybody thinks they actually tapered, but it really wasn't a true taper. It was more of a fake. No rate raise until December 2022. So basically it's, you know, full green to buy, which is why that's all I've been doing. I'm just loaded in calls. I have some hedges, but they're very far out and very cheap, so I'm not worried about like some sort of 1987, you know, crash or something, which is still a possibility. So I definitely want to at least have hedges. And then apparently these rate hikes, the next two, are already priced in. So this is something that they're saying, is that when they say that, that means that the market's already corrected for a rate hike. So since we're not getting a rate hike until 2022 and the market has already priced it in, how can you possibly be bearish? And if you know anything about the markets, it's all about the Fed. Nothing else matters. So if the Fed is saying basically, this translates to me basically buy equities, and then we got the risk indicators and timings and everything else saying buy equities, then you should be buying equities. We also have the small cap index, the Russell, breaking out of like a 9-month consolidation, which is no small thing. That was a really frustrating 9 months to try and trade small caps. So having that breakout is really nice. And then gave you guys the layout for my current filters for watch and live flow, which will help you track huge whales. So hopefully this helps you guys out. You learned something. And if you like this, subscribe and comment, and we'll check you tomorrow. Peace.